Hey, welcome everybody to Subscriber Orientation. Robert McGordy and I are here to welcome you to Hedgeye and get you set up for success. So we have launched this new show. What we're trying to do is highlight what key resources we have available to you subscribers to help you get the most out of your subscriptions. What we're going to do is we're going to run through some products, run through some educational stuff that we have built for you guys, especially you new guys, the beginners. Don't forget to add your questions in the chat below. And make sure to take a look at the slide deck we have attached with a whole bunch of helpful links. So my name is Matt Moran. I've been at Hedgeye for about 10 years. I've been in the institutional desk. Now I'm over in mass market doing customer service, sales, and marketing. I fielded most of your questions over the last 10 years. Since then, we have brought in, everybody knows Robert McGordy. Robert was one of you guys. He was one of our subscribers for a couple of years before we brought him in the house here. So Robert, do you want to kind of tell your story? I think it's important because while talking to subscribers, obviously you were a subscriber.
Yeah.
Now you are on the inside with Hedgeye. So we've brought you in to help subscribers grow in terms of what you guys need to learn, need to understand. We've developed Hedgeye University. So Robert, tell us a little bit about yourself for the new people.
Yeah, absolutely. So I found Hedgeye in March 2020 during basically one of the promos that you and your team did, Matt, in regards to providing a free macro show experience or watching of that. And then that turned into a month trial period of, I believe it was risk manager is what you were provided. And at that point I was hooked. So my background's from the institutional equity research and sales and trading desk. And at the time though, I was working for a software company and it doesn't really matter, but they basically did a rebalancing and trade platform. But the point of saying that is that, I was managing my family's retirement accounts, my wife and I, and basically our small pool of capital, and leveraging the Hedgeye research and on that. So for me, it was just about the fact that it blew my mind that I could get basically institutional grade research as an individual person. So that was really what drew me in and what hooked me. And from there, kind of, I guess the rest is history. Basically, I just dove in head first, 2 feet, whatever saying you want to use, Matt, and it was just phenomenal. So from there, I basically, just started engaging with the community. We ended up kind of myself and a few other members of the community. We ended up kind of doing a Twitter Spaces show on Wednesdays called the Weekly Notebook Review, which I still host, and we put out there for on all of our Hedgeye kind of channels, whether it be YouTube or podcasts, et cetera, et cetera. And it's still about, interacting with Hedgeye Nation and that kind of thing. So that really, I think, probably propelled me or put me a little bit more on the Hedgeye map in terms of internally. And then I joined here in October of last year of 2020. 2022. And it's been awesome. So.
Yeah, so if you guys have not checked out Weekly Notebook Review, that's probably the next stop for you. If you have not seen the Beginner's Guide, we actually have 23 episodes available for everybody. This is all available in the Education Center. What we've done is we have built this Education Center for new subscribers to help everybody understand the process. We have placed a lot of videos in here for you guys to consume, including Hedgeye University, which actually has a couple quizzes in there for you. But I think the most important thing to do is start with the current market outlook. So when we have subscribers coming on each and every day, it's where are you in the story? So people are coming in yesterday, people coming in 2 weeks ago, people coming in 3 weeks ago. What we wanted to do is put this piece of helpful content. Robert's going to walk us through essentially the GIP slide, which is really the big framework we have, that our quad model. You guys have probably seen this before, but you've probably not been taught exactly what each part of it means, because it tells a story of where we were, where we are right now, and where we think we're going. So Robert, for everybody, if in the Education Center, the link is in that slide pack you guys have. Simply click Access Current Market Outlook. It opens up a nice slide deck for us here of really where we are. So Robert, I'll let you walk people through what the quads are and how to look at this chart, what it tells you, and how important this actually is to what we do.
Yeah, so Matt, I think whether you're new or a veteran, I think just reviewing and going back through and kind of taking some reps on the educational side of things is absolutely critical. You and I have had this conversation. It's kind of like the QB room, right?
Yep.
And in terms of always kind of reviewing the tape, assessing what you're doing well, what you're doing bad, where have you made mistakes, where have you where have you maybe kind of veered away from the quote unquote process and that kind of thing. So the GIP model, I mean, it's really like an A/B test. So the GIP model or the GIP model stands for Growth, Inflation, and Policy Model. So that's really the three key drivers that drive our nowcast model, and that's what you're seeing here is basically the quad. So it's kind of a 4-quadrant component based on growth, inflation, and policy. When growth is accelerating, then you'd be living kind of on the top half of the chart there, and growth is decelerating, you're on the bottom half, right? So that's kind of and then inflation is that's the y-axis. So on the left side of the y-axis, inflation is decelerating. On the right side, inflation is accelerating. So I mean that's kind of what drives it. So you got the A test there in terms of the nowcast model and the GIP model, and then you've got the B test, which is the signal, otherwise known as the VASP. So for anybody that's new, VASP stands for Volatility Adjusted Signaling Process. That's Keith's proprietary quant model, and that really drives basically the key, the core decision making in terms of what goes into the portfolio. So yeah.
Yeah, so you're going to find this slide updated in the macro show. You're going to see it in the slide deck there. You're going to see it on it all the time. We're updating this each and every day. This is where things start for us. So Robert just threw a whole bunch at you with just this one slide. We know that.
I try to keep it simple though, man. Yeah.
So what we've done is we've actually developed Hedgeye University. If you have not taken Hedgeye University, strongly recommend you do. It's essentially 46 chapters or 46 lessons over 6 chapters. But here's one big thing. Once you graduate, if you graduate, there are quizzes, there are tests on this. Once you understand the Hedgeye process and graduate Hedgeye University, we actually give you a free subscription to any product you want. So in a couple of minutes, Robert and I will walk through a couple of our products so you can see. And if you don't have one that you need, that you think would make you a better trader or investor, let us know, graduate, and we'll turn that on for you. So if you're on the main education center, you can see Hedgeye University is going to be linked in the bottom right. It's linked all over the place. This is how important it is to go through this. Keith has identified this as being the best 90 minutes you can spend to learn the Hedgeye process. We've put it all together for you. We've packaged it pretty well, and it's pretty in-depth. So it's actually filled with a lot of videos. You can watch these videos in the module form and then get quizzed at the very end to make sure you actually watched them and took notes. If you're not taking notes, that's a problem. You need to be taking notes, get a notebook. There's a reason why Robert's show is called Weekly Notebook Review.
Yeah.
Right? So the power users on that show all have notebooks. They're all writing down VASP essentially each and every day, day over day, and taking a look at that.
I think across the board, Matt, a huge thing is deliberate study, right?
Yes.
So if you're new to this and you're trying to get better at investing and managing your own book of business or your kind of your portfolio, your retirement accounts, whatever it might be, that it's all about deliberate study. So just kind of casually listening to the macro show or casually reading the early look, that's not really going to get it done. And you got to remember that like your competition are elite risk managers and portfolio managers out there in the world, right? So you're up against, portfolio managers at T. Rowe Price, portfolio managers at Fidelity, portfolio managers at, Great Life, whatever, West Pacific, whatever the fuck the mutual fund company is. But basically, my point is that these guys are absolute pros, right? And you're trying to become a pro. So Matt played baseball. We like kind of changing up different sports analogies. Most of this office is hockey, but we're all hockey. We're no hockey. We're baseball. So if you kind of think about it from the different leagues, right, minor leagues to pros, Keith plays and has been a veteran in the MLB, right? So he's a veteran MLB player. I am getting to AAA. Right?
You want the call up, though.
Maybe, but I want the call up, right? So I'm getting the AAA, and it's taken me 3 years, and including, 15 years basically in the industry and unlearning some things and learning a new style of investing. So I just think that's a really important piece, Matt, right? Is conveying how hard this is. And so if you make a wrong decision, or if you're not getting the results right out of the gate, just stick with the process, right? Stick with your deliberate study, and over time, you will get better results. And the whole thing here at Hedgeye is not getting rich quick. It's about preserving your capital. So there's basically three components that we say all the time: preserve, protect, and then compound. And it's in that order for a reason, because the most important thing is preserving your hard-earned capital, and then it's protecting it to the downside, and then it's compounding it when the time is right and in the assets and the pieces of inventory that are that are signaling bullish trend and that are following our VASP signal. So again, just kind of want to reiterate that we say it a lot. Keith says it a lot. I certainly, we all here, believe in that. So.
Yep, I agree. Going through the Education Center further, a lot of people ask these questions, so we're just going to put it here for you. All of our webcast replays that are available to you as a subscriber, they're here for you, including all the real conversations. We've had over 100 of these so far. These are pro to pros talking with Keith. There is hundreds of hours of content here for you guys as subscribers. It's for you. We also have put the beginner's guide here. I think this is the next step for this group, is starting to go through the beginner's guide as well. Now we will highlight things, but the beginner's guide goes very in depth. There's about, I think there's 23 episodes you said.
Yep.
But then we've taken those episodes and we've made these educational playlists. You can see it's a lot of Robert McGordy on here. But in terms of, what we're showing here, we have really tried to break out each and every question that we get each and every day from subscribers and put it in here, answer it for you here. So this is also in that slide pack you have available to you. Just simply click on it and you'll see the links in there. But literally how to read the IVOL table, how to review it, how to manage an ETF Pro position once it's removed. These are all questions that we get each and every day that we wanted to package for subscribers so they understand what exactly to do in those situations. So I think we have...
Yeah, and just to clarify, Matt, so these questions really came from subscribers when we were doing this, right? So that whole concept was, trying to take in questions from subscribers and try to help them, basically walk through the process or how to sort of better handle it. And again, I'm as I said, I'm AAA, so I'm close to getting the call up, but I'm still kind of a rookie myself and learning alongside of all of you out there. But the big thing there, I just want to reiterate, is that these questions weren't just ones that I kind of randomly came up with. It's literally answering questions from the arena or Twitter or what have you, and going across them and trying to give our best answer, my best answer, et cetera, et cetera. So just but there, and again, if there's something's on there that you don't see, myself and the studio team, Eric, who's behind the camera right now, we'll produce more of them, right? We felt there's a lot of content there, right, Matt, and therefore that's kind of why we sort of paused on the beginner's guide for this year.
I think we're going to be creating more of this content here moving forward.
Yeah, agreed.
Especially feedback from you guys would be great. What you want to see from us. We're trying to answer all of your questions and set you guys up for success. Going back to the Education Center, we also, if you want to listen just audio only, we have a lot of content available to you guys simply on podcasts. All those real conversations are all put here. All those events that we do for subscribers, they're in here for you. Lots of questions on Keith's reading lists. You'll see them mentioned a lot on the macro show and in the early look. We put that here for you so you can take a look at those. But scrolling down further, we also have a macro process overview. It's 14 minutes long of Keith running through the process from start to finish. Highly recommend that. But then you also have all the events coming up at Hedgeye. We get this question pretty frequently from people in terms of, you guys host about 10 events per day. Well, a lot of days we do that. But we listed out for institutional versus individual for you here. And when there's free and clear content, it's going to be here. But this is just letting you know, if you have a subscription to some of these services, you're going to get invites sent to your email, but they're also going to be listed here for you. So if you ever want to see what events are coming up with Hedgeye, they're here. You want to see all the past events? They're here too. So I think it's time to start jumping into a couple products.
And just for folks, they're also listed at the end of the slide deck for the macro show as well. A lot of the past events and upcoming ones. So, we do our best to sort of try to put it out there in different locations, stuff like that. But Matt put together a number of links there that we've shared in the slide deck. I'd highly recommend everyone at home, bookmarking those so they can review them. For me personally, it's still, if I share my screen right now, you'd see it's, one tab's in the real-time alerts. The next tab is my trading view screen. The next tab is Coifin, and then the next tab is my actual brokerage account. So it's
Couple tabs open.
it's a couple tabs open, but that's kind of how I do. This it's real time alerts, and then yeah, so it's really important to kind of like be able to access things really easily and
Yep.
seamlessly and that kind of thing, and just kind of figuring out what works for you. And again, I'm in the seat, bolted to the chair, all day long. But for many at home, you can't do that, and so that's where there's definitely ways to try to execute and still leverage our process and kind of the risk management style that we do. And when I was when I was working full time, it would be, and I think we're going to get into this in a minute, but it would be setting kind of limit orders, or whether it be sells or buys at the top end and bottom end of the risk ranges, for instance, right? So kind of if you're not always there in front of your screen, there's ways of executing within your brokerage account, ways of kind of analyzing the data, spending time going through the different setups each and every day, right? So I know we're going to get into it, but basically the three things I did every day were the macro show, watch the macro show, read the real look, and write down the risk ranges. And so, yeah, so just kind of wanted to reiterate that.
So I think it's time. Let's jump into the risk ranges right
Yeah.
now. Just so everybody knows, risk ranges come out each and every day, published before the market open. This will give you a trend view and a daily trading range. At the very top, anything that's changed day over day, we will highlight for you. So if anything's added to this or changed from being bullish to bearish, or in this case, you have natural gas going from neutral to bearish,
No, neutral
bullish.
to
I'm
bullish.
sorry. You'll see that reference here and highlighted here. Robert, as a subscriber and as somebody on the inside now, walk us through what this is telling you, how to use it. Remember, there's also how-to videos
Yeah. So we
on
won't go.
YouTube for us.
We'll go too in depth because again, but the risk ranges just from a high level standpoint are your immediate term probable range. So the risk range itself is on a trade duration, so that's 3 weeks or less of using price, volume, and volatility to incorporate basically the probabilistic range in terms of the top end and the low end. So if you just pause there, Genron, in terms of the Russell 2000 RUT, kind of at the top, or we can do Nasdaq as well, since it's right at the top, probably easier to look at. So that's the Nasdaq Composite. That's the CompQ. It's neutral trend, and you can see there the low end of the risk range is at 13,193, and the top end is 14,090, and the closing price as of last night was 14,019. Now these are dynamic, so once the market opens and price, volume, and volatility changes throughout the day, these ranges will fluctuate a little bit. But again, if you have it on your screen or your watch list in terms of understanding, okay, like if there's a big spike, if the Nasdaq moves up 2%, right, the top end of that risk range is going to just naturally move with it because it's a price, volume, and volatility model, right? So I think that's a really important component in terms of these don't go stale just once the market opens, but they are dynamic, and just understanding kind of the slight nuances in terms of what influences them is really important. And then yeah, I mean, basically this is where you can execute on the fringes, basically is how Keith would kind of put it, and you execute very simply. If you want to boil it down to a very simple component, it's executing at the top end of the range and the low end of the range. So you'd be a seller, if you're long of something, so XLE is bullish trend, we're long on that. Same with healthcare. You'd be a seller at 89.41. You'd be a buyer at 86.54. I mean, that's like the simplest way of thinking about it. But there's a lot more nuances that go into it, right? And measuring and mapping. That's why I say deliberate study is incredibly important, because measuring and mapping, the best example of a bullish trend is something that's making a higher high and a higher low. So in this example, like tomorrow, if you're looking at these risk ranges, you'd want to see 89.41 on the top end move to 89.50 or something, right? So that'd be a higher high. And then, on the bottom end, you'd want that 86.54 to move up to 86, and 3/4 or something, right? So like if that's, that's what we would call a big higher low. And that means that basically from a price standpoint, the probabilistic move on a daily basis is a lot, the low is a lot higher than it was today, right?
Yep.
So that's a good signal. It's something that you want to see. And I've walked through this. We've walked through this. Keith has a ton of videos on it. I've provided a number of videos on it. We address it often on the notebook review as well. So again, like these are, yeah. So we'll leave it at that.
So this is going to be under the playlist is leveraging Hedgeye products. It's literally how to use risk ranges. So if you're a risk range subscriber out there, that's for you. If you want risk ranges, I think you understand what you have to do. That is go graduate Hedgeye University. We'll turn that on for free for you. So Robert mentioned when he was a subscriber, there are the 3 products. You have risk ranges, early look, and macro show. So let's jump into the early look and let's run through that because there's a Monday edition that comes out and there's also obviously the rest of the week as well. This is usually most of the time written by Keith, about 90% of the time, I'd say.
Yep.
Obviously comes out before the market open. How did you use risk? How did you use early look?
Yeah, early look. Again, it's about probably 85-90% of the time. It's Keith's sort of input or thoughts on what's been transpiring in the market and what he's thinking through that morning going into the open, right? So, did you pull up? Yeah, you pulled up this morning's, which was awesome. Yeah. So again, this is so this is kind of understanding, getting a good assessment as to what you should be thinking about as well. So that, and again, these are like the thoughts of a pro. And on Mondays, it's what we dubbed the macro Mondays. So it's kind of reviewing the weekend work and reviewing kind of across global macro, what's transpiring out there. So, that's really what drove the macro Mondays after reading a number and seeing the repetitiveness and the consistent format from Keith. It gave me an insight into what he's doing on the weekend and running through his weekend work in his notebook. So I just started to kind of mirror that, and you can as well. So read, if you're new, read early look the next few weeks and try to do it on your own in terms of some of the key call outs. Like if you're calling out in your notebook similar things that Keith does on a Monday morning, that means you're really progressing well and you're doing a great job at deliberate study. So the early look to me is a must. And again, it's one of those things where it's a relatively short read, so you can be doing it whenever you have time, whether it be brushing your teeth or before the kids wake up, whatever you need to do. So just make sure to me it's a critical piece of my daily morning read.
Yep.
Or process.
And the third part is the macro show. So we'll hit the drop 10 menu. You can simply click on the product that you're looking for. We're gonna give you the top 3 things each and every day. There are huge call outs here. We're gonna talk about it on the show, but you're gonna get this right before the show as well. And then we actually go down to the replay of it, or the actual. The show's going to air live at 9 a.m. each and every day, and at the same link, there's also going to be a replay each and every day too. So it comes with a slide deck. So let's actually jump into that and show you guys what that looks like too. So it goes to the top 3 things, but Robert, walk people through how you use the macro show as a subscriber.
Yeah, so again, we've done a number of videos on kind of walking through the macro show deck itself. So I'd encourage you to kind of go and review that. But basically, it starts with the top 3 things, which is Keith's most, basically the biggest call outs in global macro for that day. And again, it's one of those things as a new subscriber, if you're really passionate about this, you should kind of aspire to having similar call outs to Keith in the morning. And if you get 2 out of 3 right, or let alone 3 out of 3 right, then you're progressing really, really well. And I think so I think that's a big thing in terms of just key call outs in the morning. And then obviously as we progress, Generon, if you go down, we've got the GIP models there. One question in the queue right now is like, where can I find that update? And here it is. It's in the macro show deck every day. You get the quads. That's the GIP model. So that's kind of gets updated with the freshest data. And then as you go through, this is the expected values by quad regime, the highest and lowest, so the best and kind of worst performing assets. And most importantly, or one key slide that we started incorporated after beginner's guide is the position sizing. I think if you get your position sizing right, it can really free up a lot of anxiety, right? So a lot of times when people, what happens to me too, right? Like if you get a little too big in a position and it's going against you, it just, it's painful. So if you really stick and think through your own position sizing, these are keys and kind of hedges and ones that I've also adopted myself. But this is sort of, your longs are bigger than your shorts, right? So hence on the kind of right hand side, hard to see there, but a max long is 6%, a max short is 3%. for an ETF like equity, right? So again, these are all volatility adjusted. I go through a number of this as well, so I don't want to kind of belabor the point here, but yeah, again, like throughout the day, it's the next section is chart callouts, right? So it's like really important kind of global macro kind of callouts, whether it be crude oil, options data from 201 Alpha. That's been a phenomenal partnership that we just launched a month or so ago. And yeah, you kind of keep going down the list. I think this macro grind is one that we've reviewed, and it's actually in the beginner's guide on YouTube. But this is crucial stuff, right? Like reviewing again, like these are important, and we deliver them for a reason, and it's because it's part of our process here at Hedgeye, right? Like reviewing, day over day volume, month 1 month average volume. What's kind of the style factor performance changes? What's the U.S. dollar correlations? All these things are important to our decision making, and when Keith hits a button throughout the day, this data and this analysis is incorporated in that decision making. So.
Yeah, these are updated every day, which is awesome. So one thing I do want to highlight for everybody, I think the power users know this, the new people probably do not, is there is a search function on hedgeye.com. So I want to show you guys this before we open it up to questions, but there are things in here you can go and look and find the pitch. So we do the pitch at every 2 months or so. You can go and find these things relatively quickly here by using the search functions. So you can see each of them coming through here. So that's one feed.
Are you sharing your screen?
Yeah, should be.
Genron, can we get back to the screen? Yeah,
there it is. So use the search function. It's right here. You can literally go through by products and date and relevance. It's a very underutilized tool on the Hedgeye site. Highly recommend using it. With that, that's all we have.
Yeah, I think the other. Well, I just if you go to the account, go back to sharing your screen there. Let's just walk people through kind of how they can manage their account. Again, email notifications, you can turn those on and off.
Yep.
Right. So this is again the account settings. If you're getting too many emails, they can come in here and sort of navigate which ones are important. I think the other component too, Matt, is there's a couple different apps out there that are available for our subscribers. So if you subscribe to real-time alerts, there is a real-time alerts app for both Android and Apple users. Make sure you turn on those notifications. Those basically ping you anytime that Keith sends out a real-time alert. And there's also a free app, regardless of what subscription you have, called Redeye Greeneye app, and that's just focused on the SPY, on the S&P 500, and whether or not it basically, from our signal standpoint, from Keith's perspective, whether it's a buy, sell, or snoozing, aka Z's, which is really just a neutral component. So I think managing your subscriptions is really important. Understanding again after this, this view, what have you, I'm not pitching you on new products, but if you do want to subscribe to one,
yeah,
it's all here, right? That kind of thing, and then and yeah, so I just kind of want to highlight a couple of those things for folks.
Yep, I think it's important highlights. Remember, go through Hedgeye University. We'll get a free subscription turned on for you. Learn the process, graduate, do it. With that, we can open up to any questions we have. I think we had one, but I think we answered it. Anything else pop in?
Yeah, so Jake had a question on like GIP slides and updates. So again, the quad itself gets updated on the macro show deck. If you want the deeper dive on the nowcast model and the GIP and more of those details from a GDP standpoint or inflation standpoint, those get updated for Macro Pro users every day. It comes out in the morning shift. So there's a little. Actually, do you mind pulling that up? Maybe
sure.
The morning shift note, and I can just some folks don't actually know it's there, but that's we actually include the most updated version of the macro themes deck, which does get updated as new data rolls in. So that's really the most up to date. So there you go. You got Dow Jones there. At the top is the replay for the Q3. So if you just kind of scroll down, there you go. So if you click on that one, it'll take you to the actual macro themes presentation that we did, and then the one below that is the actual updated deck. So as you'll see there's about 7 or 8 different slides that get updated as new macro data flows in, and that's where you can really get the most updated version. So if that's something that's important to you, then basically you got to upgrade to Macro Pro.
Yep.
But otherwise the quad map itself is available via the Macro Show.
So guys, if you have questions, send them into support@hedgeye.com. If there's things you want us to feature that we are not covering on those YouTube playlists featured in the Education Center, send them into there, and we'll get that taken care of.
Yes, we got another question from Dave here. What's your advice for someone who signs up for Hedgeye, quote unquote, late on a call, i.e., Japan, and it's not going my way? So, Dave, it's a good question. I think Jamie Bruno and I think Keith said this a number of times. Bruno loves to say it's like really depends on where you come into the movie, right? So if you're coming in halfway through a movie, you're kind of missing the whole sort of setup, right? So the initial setup, and with Japan, again, this is something where it becomes, these calls, I guess. What's the best way of saying this? When you least expect something to go to the bottom end of the risk range is likely when it will happen. So patience is key. When I joined Hedgeye in March of 2020 and started kind of reviewing, their process, getting a better feel for the portfolio construction, et cetera, I didn't put on my first trade until May. Right, so this is so that, and I remember it like it was yesterday. It was gold, and I fucked it up. And so I'm going to say the F word generally. And so but my point is that it's all part, depending on, it's a full cycle, right? So it's like cycle. Keith keeps mentioning cycle to date, and where we are in the cycle does it does influence sort of the portfolio. And so understanding, going full boat on Japan, for instance, right? Or not risk managing it and selling some at the top end of the risk range, even if you just got in, right? If it goes to the top end of the risk range, you should be incrementally selling some. And then as it moves to the bottom of the risk range, you can add more. I think Keith addressed this in the early look this morning in terms of being a buyer of energy related components and being a buyer of Japan here in August really proved very valuable. So if you were at your max positions in Japan on that pullback, then unfortunately you missed an opportunity to actually add more because we were sellers kind of at the top end of the risk range. Now, that timing isn't perfect, right? And sometimes you only bring it down to mid sizing from your max, and therefore you only have kind of like a 2% position that you can add to. But navigating the Nikkei risk range from the risk range product and seeing the higher low or the lower high, that's an indicator of something that isn't necessarily or the probable range isn't really moving higher, right? So navigating those and understanding how those risk ranges are kind of flowing from a day over day and a week over week basis is important. But unfortunately, if you're late on a call, if you're not comfortable, kind of like quote unquote, if chasing it, to use old wall language, then just stay on the sidelines for a little bit, right? And wait for that pullback. Wait for maybe Keith to add it to RTA or something like that. And just patience is a crucial component. And most recently in the last week, I think we added the dollar to ETF Pro earlier this week. Keith was adding it in the re-rank in his own Mucker family office. Those rankings or that rank order of positions was provided in the early look this morning from Keith. So again, like kind of reviewing, that rank order versus what your portfolio looks like can give you a good kind of A/B test in terms of, what have I done versus what Keith was doing from a long only standpoint, and how do they compare? Is my top ranked longs similar to Keith's? Do I need to get bigger in something versus another, piece of inventory? Again, I think just doing some due diligence and doing some deliberate study there will be very helpful. And obviously, we're lucky today that, Keith provided that on the early look, and that's again a portion of Macro Pro is that re-rank position sizing that folks get every day.
Yep. Question of position sizing, by the way, you're gonna hear it from me a million times. It's in the beginner's guide. We have actually 3 videos on this. I think it totals about 15 minutes worth of content for you just on position sizing for McGordy already.
Yeah.
So if you have questions on that, I highly recommend you guys going in there and looking and viewing those videos first.
So then, Diane, thanks for your question. And Vince, sorry, I'll get to Diane's. Vincent, the moderator, did answer it, but is there a recording going to be available? Yes, absolutely. So obviously from a Q&A standpoint and interaction, getting in your questions kind of live, we're going to be doing this believe every 2 weeks, every other week, so kind of twice a month. And again, if you got questions ahead of time, we're happy to kind of allow you access to that, and we can, again, this is a bit of a new show, so a little bit we're kind of figure out like as we go, right, Matt? But replay is obviously available. And so Diane's question, so thanks, Vincent, for that. And Diane, please go over how to get started with a notebook, what to start reviewing on a daily basis. Thanks. So my good buddy, Chris Moyer, who I call out a lot because he's a smart dude and a major Jedi in terms of the Hedgeye process. He's said this probably 100 times on the weekly notebook review to folks who've asked, like, how do I get started? It's just get started, right? It's going to change. It's going to evolve. My notebook has evolved. My notebook has changed since joining Hedgeye in October because I get a bit different data and a bit, get access to stuff a little bit earlier and that kind of thing. So, but just get started, Diane. I think the biggest thing is like what's important to you, right? So are you investing daily? Are you navigating a long only portfolio versus a long short? There's a lot of different components to answer, so it is a bit of a tough question to answer, but at the same time, if you just get started, right? So get started, perhaps, for me, it's writing down the risk ranges, right? So you write down the risk ranges, reviewing what those look like on a day over day basis. Are they making higher highs, higher lows, lower highs, et cetera, et cetera. Any changes, right? The trend changes that we highlight. So natty gas was this morning. It went from neutral to bullish. Those, Matt, you did a phenomenal job of adding that feature to the risk ranges when we were down a man, and Matt stepped up to publish those every day. He added that feature, and I think it's phenomenal because it's a lot easier to call it out, and it's right at the top of the page. But from your notebook standpoint, it can be, some folks use it more, a notebook more as like a trade journal. So you kind of at the end of the day, you assess like what did you add or subtract, or at the end of the week, you can kind of do it that way. It really just kind of depends, Diane, but I think, tracking volume, like volume, volatility, day over day changes in terms of, what have been outperformers from a sector style standpoint is going to help you assess like kind of what the market is generally signaling or what is outperforming, and kind of try to get a better feel for what should maybe get put into your portfolio alongside, Hedgeye. For me, it's basically price, so like day over day changes, volume, what's happening in the S&P and other components, then all of the volatility components there, right? So everything from the move to the VIX to FX vol, what's happening in the yield curve, so the 10-2 on the US 10-year and US 2-year, and then going into the eyeball table, so any call out. So Keith called out XLK at a -5% discount this morning. That should have been in your notebook, right? So there's a few different components there that were discounts. XLK was one of them. We've seen a few eyeball discounts kind of start to creep back onto the board. So some complacency is setting in the market, and that's something that you should be noticing versus the premiums that were there just a month ago, et cetera, et cetera. So that's kind of one component there. And all that data, if you notice, or what I'm talking about, it's all in the macro show deck. And there's a reason why, again, as I said, that we put it in there is because it's really bloody important. I didn't curse, Genron. And so it's really important. And just kind of writing a lot of that information down can help you just, basically execute at a higher level.
That's all the questions, I think, right?
It is.
All right, guys. Thank you. Send in some feedback to support@hedgeye.com. Send in questions to support@hedgeye.com. We want them answered. You new subscribers, we want to take care of you guys, point you the right direction. Contact us.
Yeah. And remember, Hedgeye University, complete that. You get a free product for 30 days, right, Matt?
Absolutely.
Yeah, free product 30 days.
Go ahead and graduate, guys.
Go graduate. It's really important. Again, hit us up on Twitter. It's at Hedgeye is the Twitter handle. I'm at Hedgeye RJM. And obviously, you should know Keith by now. But and again, the Notebook Review is live on Twitter. It's Twitter Spaces. Usually, it's either 4:30 in the afternoon or 8:30 in the evening. And that's a great way, again, of kind of interacting with Hedgeye Nation. A lot of Jedi step up and kind of talk or take questions and stuff like that. It's a very communal environment. So I'd encourage you to kind of engage there and take time to do that. Yes, Diane, you just said thank you. This session was very helpful. I appreciate that, Diane.
Welcome to Hedgeye Nation,
Yeah,
Diane.
welcome. It makes, pretty cool.
Yeah.
Awesome.
All right, guys. We'll catch you next time.
Sounds good. See you in Vegas. Anybody who's going to Vegas, we'll see you in Vegas in like 10 days.